next to her, Carolyn Fay, AP, I don't know your title exactly, Carolyn, but
Accounting Supervisor.
Accounting Supervisor, thank you. We have Natasha Yemitz, our Treasurer. We have Agnes Kwai, our Budget Director. And we have Megan D'Amato in the room, our Risk Manager. So Joan, take it away.
Okay, thank you. So just for overall scheduling, we're going over 3 areas today. We'll start with the Finance Department itself, Department 130. Then we will go to revenues and then fixed charges. So if you want to follow along in the budget book, if you go to general government, starting on page 18, actually pages 18 and 19. Starting with the TOO, there have been quite a few changes as far as titles and people, not to the total TOO. The only change in total was we had a part-time position during this year, and this was an interim, so this is not part of this. It does show up as an increase, as a 0.29 increase from a part-time 0.71 to a full-time 1. And that was a transition that we went through with the executive assistant. It was basically related to Leo, so we're very thankful that it all happened. Do you want me to go into more detail on that, or that was during the year, so I just wanted to reconcile that on the page.
Yeah, let's just, for clarity, so Leo Barisha, who was formerly the customer service representative on a temporary basis, was promoted to executive assistant. We're very happy to have you, Leo. So now we're eliminating the part-time position.
That's correct. But that already happened, so.
Right.
But as far as changes to the full-time positions, there's no changes in total. However, we had a big transition year going from the Pete and Roland to Joan and Agnes. And along those lines, there were several title changes. And for example, the chief accountant role changed to deputy comptroller. It went from comptroller, chief accountant, budget director, and assistant budget director to what it is now, which is comptroller, deputy comptroller, budget director, and the assistant budget director position remains open while we, A, fund Roland and Pete on a part-time basis, and B, figure out what we want to do, how we want to structure going forward. So just some background for those that didn't live through it over the last year. So any questions on TOO?
Yeah, you've got the finance customer service rep, which is, I guess, vacant at the present.
So we've gone through, and this is very brand new news, so I haven't even shared it in a controller's report, but we have moved a position around so that the current open posted position is the payroll coordinator, which is really Carolyn's right-hand person and critical for us in some of the implementations and streamline work that we want to do around AP for going forward. So that is open right now and posted.
The payroll systems control?
Did I say payroll? Accounts payable. Accounts payable.
The accounts payable coordinator, but that's separately on your TOO, and then right above it is the finance customer service rep.
The finance customer service rep is now an accounts payable clerk.
Accounts payable clerk. So you're going to have 2 accounts payable clerks.
Correct.
Okay. And so are both of those filled now?
Yes.
So the only open position is the accounts payable coordinator.
That is correct, in addition to the assistant budget director.
Deputy budget director. Okay, now I got it straight. Thank you.
No, thank you.
Do we need to update this at all? Are we still listing the finance customer service rep?
No, we could update it. This all happened since this was done,
Right.
so
Right.
we can update the titles.
Why don't we, just for clarity?
No, I agree.
Okay, so there is one vacancy at the moment, and that's the deputy budget director
And the accounts payable
and the accounts
coordinator.
payable coordinator. Okay.
Do you contemplate any other changes to your TOO?
Not at the current time, because we do have that one other position, the deputy budget director, that, that we're kind of working on.
Okay, but everything else is pretty well settled down?
Yeah.
Okay, thank you.
As Carolyn will explain shortly, we do have some, we did want to share some of our longer range plans with around accounts payable, briefly, high level. And so, but we think that we are set up correctly for that as well.
I
So
just
then-
want to underscore that this was a large year for transitions. We're very grateful to the team for working together and making it happen. We're very grateful that Pete Minarski and Roland Geiger continue to play a part in helping with the transition. Pete is in the room at the moment in his new capacity, I think, on RTM BOC. He just can't give it up. Bravo. But it really was a tremendous effort by all, so thank you, everybody.
I would second that and thank Pete, since he's in the room. Maybe 5% today as a backup, just in case. Moving over to the page 18. So the regular salaries, you'll see an increase of 116,000. And that relates partially to the change in the part-time to full-time. That's why it's a 6.6 increase versus the, closer to a 3% increase. There's really nothing else in that that changed year to year. We are running favorable this year, but that's because of the open positions and the partially absorbed by P and Roland time. Professional and other services, that the 340,000 is adequate. That covers our external audit fees in addition to our internal audit fees. So Doug had submitted a question asking about why it increased back in '21, and that was when we started the internal audit program. The work transfer to from other, that $84,000 credit, we charge the Board of Ed $75,000 for the audit fees. So that way we show the full amount that we pay, then you can see the amount that we charge to them. Going to expenses, I just want to point out that bank fees are being held consistent. That consists of credit card fees in addition to bank fees. The credit card fees are the majority. And for example, in fiscal '25, credit card fees were $259,000 and bank fees were $25,000. The other, there's not a lot of variances here, but we've used the rental maintenance software in addition to the professional services IT for we've kind of scraped together money for some of the projects that we're looking to do with accounts payable. So I thought this would be a good time for Carolyn to kind of go through our vision. And again, very high level and summary. What's in the budget right now is an implementation of an additional module in Munis, which prepares us for some of the steps that we want to take in the future. So I'm going to let her talk through that. But there's no budget increase, but this is what it's being spent on. But going forward, and she'll mention, again, this is probably a year away. With AP automation, we just kind of want to socialize it out there, and there will be an additional amounts.
Thank you. Hi, everybody. Carolyn Fay. So yes, we're talking about SSRS is the name of the module, SQL Server reporting tool. And what this allows us to do is export data in a very structured manner so that we can have the oversight in the data that's flowing through our financial systems, which is critical to support a more automated future. When you look at any ERP system, they're very complex databases, relational databases with the data. Really you have to be like almost an IT software engineer to really understand how the data is flowing through the system. But when you're in finance, we might have a little bit of an IT bent, but we need to be able to access that data in a way that we can trust the data, that we understand the data that we're looking at, and we're able to pull it ourselves. We can't put reliance on an IT person that may not know much about finance to be able to extract the data. So what this tool does is it puts a front, if you will, on the top of the relational database in a way that the data is very structured and easy to follow so that you can pull out the data points that you want and relate them to other areas within the data. So again, why? What's the purpose of that? Because in the future vision, when we go to a much more automated state, really in order to manage that and also to manage our books and records, we really want to have a good access to the data. And honestly, I've been doing this a while, and I've worked in Oracle and SAP and others, and without a tool to access your data and make sure that you're accessing it well, that you can depend on that data and rely on that data, and your external auditors will agree that they can rely on that data, it's really important to have a tool such as this. So that's the baseline. I'll stop there in case there's any questions about the tool, if I didn't explain it well enough.
Carolyn, just for our benefit, can you tell us how it works now and sort of what
Yes.
the major changes would be? And then I'll get to Doug's
No,
question.
that's a great question. Right now, we are tied to the base that comes with the program reporting. So often I'm asked to run reports, or I want to run a report myself just so I can understand, before I make any changes. For example, like the Amazon, we'll talk about that in a minute. We wanted to move to a global instance of Amazon, but how could I justify making a big process change like that without really understanding it? So I had to pull purchase order data, I had to pull invoicing data, coding data, and I had to throw it into a relational database and put it all together. Took a long time just to get to the answer that shows the true justification of why we need this and the number of invoices we're processing, the inefficiencies, et cetera. That's a lot of work. And then if I needed to do that, if you said, can you redo that today, I would have to go through all that work again. In this tool, this is just like an example, you can actually build that and save that report so it becomes push button in the future. And why is that important is because, again, if you build something that, say, maybe you put reliance on important data or data that you're reporting on, you can build that tool and lock it down, and then the auditors will see that it's managed with good change control, and they will actually put reliance on that data. So yes, I'm using it for operational purposes, but I also see the vision of using it for a good, better structured financial reporting, and also to give better comfort to our auditors in how we're using the data. I hope that answered the question.
Thank you. Doug?
Yeah, can you just, so if I'm understanding it correctly, it's kind of a dashboard back end or front end where you can get the output of the data. So we have everything in the database. This will make it much easier to save time there.
Yep.
Can you just talk whether the processes on the front end where the data inputs in, where are we in that process where that's automated? Because that would seem to cross many departments, and that
Yes.
seems like a bigger lift, but also
So Doug,
incredibly
that
important.
is a perfect entree into, so again, this tool is to get us to the baseline. Like, I would be hesitant to go to an AP automation without the visibility of the data. I think that would put us at risk. So perfect entree into AP automation. So what is AP automation? I don't like it being called AP automation because really it should be called purchase to pay cycle automation, because really the AP is at the very end. We are like the last people that touch it before cash goes out the door, which talk about high risk. In any business, that's your highest risk, cash out the door. That's where fraud happens, mistakes happen. So, we're the last person that touch it. And what you really want to do is go back in time, to where the purchasing people are, that they have a need, they need to make a purchase, they want to buy this pen. Now comes the data. This is the first time we have a data opportunity to get into the system. In our current process, we're not really utilizing the purchase order. We're not leveraging the system to put this information in the system very well enough. So basically, they place an order without necessarily putting the PO in the system, and we all wait for the invoice to show up. But here's the problem, and Penn is not a good example. Let's say it's for a bridge, repairing of a bridge. By the time it hits accounts payable, a lot of that data is missing, and at that point, we're trying to perform the key controls. One of them is to make sure that the insurance is in place. This is not a good time when I get this invoice to make sure that this insurance is in place. That's a risk. So what we want to do is get the data input. I'm just using one example as insurance. We want to start to enter that kind of information into a system so that even before a PO is raised or work is committed, we have access to the data to see, do we have the right insurance in place? It shouldn't be checked here, way too late in the process. So if that's answering your question as an example of how you want to leverage the tool to get the data in earlier so that we can operationally manage it.
I guess my question less around but like, is that front end workflow or processes already in place? Because like, I guess the question is you may have more visibility into where the processes upstream can be improved.
Yes.
But then and maybe this is, 2 steps down, but how do we then actually improve those processes upstream? Again, that streamlines the whole process, creates efficiencies, but also just lowers risk and some of the issues you talked about.
Right. So if you're asking how to do that, is that what you're saying, how to do that? Okay, now we're getting into project. Go ahead. No, go ahead.
It's, do we do that? It seems like, so then it's, how do we do that if
Right.
that's...
Absolutely. So in order to be successful, this is a project. Any successful project, you have to do an as-is evaluation, which I've done. And then you have a vision of your to-be state, which I've also done, and then you'll do a gap analysis. When you look at that gap analysis, that's when you figure out, like, this is what we need to fix upstream and how we need to fix it upstream. And a lot of that's stuff completely outside of the system, like policies. You have to have a policy. This is when you have to raise a purchase order. This is the data that has to be entered into the system. Because to your point, garbage in, garbage out. So you do have to reevaluate the process. And also the other important thing is, where can you take these key controls? Like I was doing an example, the key control was happening at the end of the process. No good. We have to move the key control to the beginning of the process. How do you do that? Policy, requirements, training, reinforcement training, all of that. So I hope that better answers the question.
I guess, and we're probably a little early in this, but it seems like you have a clear vision of what to do, but how you transfer the what to do into how that is implemented is still a TBD.
Yeah. So we are at the early stages of that. But again, we're not going to go over this now, but I've created flow charts and to show where we need to, areas that we need to work on, we need to evaluate more. This can't be done in a bubble. I need to talk to the actual people placing the orders and find out what their processes are as part of my gap analysis, and then make sure whatever their needs are also reflected in this process. And that's why I wanted to say this is much bigger than accounts payable. It goes all the way back to like the beginning of when I need to order that pen.
So at the end of the day, how do you determine success? Is it better policies and procedures? Is it a different throughput? What's
All of that. Like any implementation, we'll design it. We're going to meet, with key people that will be impacted by these process changes, and then you have to determine, like, what does success look like? To me, it looks like that you can go from beginning to end in a digitized format. It's like right now everything is 100% manual, and so when you can make everything go push through the system instead of all these manual invoices floating around, and we're able to pay on time, we're able to put our orders in on time. So start from the beginning. We can put our orders in time, and we can pay our vendors on time, and we have a digital footprint along the way, and we have a controlled environment that the controls are in the right place, then we've had success.
Sorry, just one more. What is kind of your timeline on this?
Yeah, that's a great question. I think it has to do with, there's going to be funding that's needed to put in the software that will allow us to do this. So part of it will be reliant on getting that support. I don't know if you want to add to that.
So the first thing we needed to do was get a team in place. As you know, we've had some changes, and we've had some, we've been down a head and a half with all the transition. So that's our first goal. And when Carolyn talks about the SSRS, that's permissions, she's already done so much cleanup of vendors. So the vendor count went from 50,000 down to 5,000. That cuts out a lot of mistakes right there, just by selecting the wrong or duplicate type vendors. So it's a process. So we're not asking for the funding yet for this year. We want to get this message out there. We want to make some changes in Munis and get this settled and start letting people know that changes are coming. Because, for example, DPW and the Board of Ed would be our two biggest customers here. They've been doing things a certain way for a very long time. So in combination with the automation and using, there are various AI tools it's actually kind of state of the art. Like, we're waiting for them to finish building, and we don't want to be the guinea pigs. We don't want to be first or second. We'll be, in the early stage, middle. But we just wanted to get it out there so that we all, that we're constantly looking at this and we're preparing ourselves. But it will be a big change. If you think about where we're going to be in 10 years, it's not going to look anything like today. So, it's evolving. We're happy to talk about it offline in more detail, and get, any of your thoughts.
Harry?
Yeah, you mentioned funding for this. Is that in fiscal '27 or fiscal '28?
So in fiscal '27, we have the SSRS, that's in. But as you can see, it's kind of in what we've already had. We haven't asked for much of an increase, so we're good. So no, it's going forward into '28. This is
Okay.
looking out there.
So it's going to
because we
take
have-
that long to prepare for it?
If we're able to do anything quicker, like if, for example, right now, Carolyn's had to do a lot of the day-to-day AP work. Like after this, she's running back because it's Thursday, and that's when, they process over 1,000 payments a week. So it's just a matter of having the time and resources. So when we get fully staffed, if it happened quicker, we would come to you sooner.
Okay.
Or, we would figure out a way. So we're not really letting funding hold us back. We just need to be prepared.
More logistics?
It's more logistics,
Yep.
right?
Okay, thank you.
No, I totally agree with that, and making sure that that gap analysis is really, that part of it, the non-system part of it, where you don't need the funding, and really working with the other departments to make sure it's about designing the right program that'll work for everybody, or for most people.
Carolyn works very, very closely with Tyler. Tyler, they run and own our enterprise system, Munis. So, and that's all of our accounts payable, all of our general ledger. So we don't get charged for a lot of the things we ask. We just are constantly, they're letting us know who's doing what. I think Carolyn stays very current, so.
Excellent. We have some questions from the side.
Maybe it's too late, but just to hopefully save the Budget Committee some time. Audit Committee is going to be taking up a lot of this work through the internal audits that we're doing, Phase 5. There's a total IT general assessment that we're doing. So we'll be looking at all the things that you guys are asking about.
Great. Elliot?
So maybe this is more appropriately brought up with the Audit Committee, but I'm interested in learning about security, encryption. This is very sensitive information, and I'd just like to know more about how we're protecting ourselves.
So one of the SSRS tool is going to allow me to do RBAC, role-based access controls, because I'll have the visibility into that, and that will allow us to enforce segregation of duty and make sure that we have a much more secure environment. So that's one way it will help us. SSRS too will also allow IT or even the auditors to have better access to how the data is flowing through the financial systems, which is where a lot of your risk would be. So it'll leverage that.
I can tell you we can't do anything without IT, Tom and Megan's very aware of this. The answer is always no, anything we want to do from Tom Klein until, as a matter of fact, Carolyn streamlined our 1099 process, but we had to delay it a whole year because we needed IT to clear from a cyber perspective. So I can, and that's part of the audit committee. The audit will be covering that as well.
So one question I have is, who owns the Tyler relationship? And I think we've talked about this over the years, that it's been, the cost, I think, has been in IT. Sounds like Carolyn has forged a relationship with some of the people at Tyler, and this is an actual upgraded module of Tyler. So does it make sense to centralize where Tyler is?
So this is, and I'll let Carolyn, because I know she has many thoughts on this, but this is one of the reasons why the auditors suggested, and we jumped on doing this IT review, because IT owns the full budget of Tyler, but when we want to start doing things like this, they say, you're on your own. And also on our own from we have support, we have very good support from IT, but sometimes it's very technical, the things that Carolyn is doing. I think this happens in other departments as well, which is why we wanted to do that assessment of who owns what and does this make the most sense. I'll let you speak.
In my past lives, I was an internal audit manager, including IT systems. So I have a strong opinion on this, and that's that there should be two owners of the ERP system. There should be the functional owner. That's how I view myself. I am not an IT person. I know enough to be dangerous, but I am not an IT person. And by functional, user, so the user access controls and a lot of the designing and inputting of that. Whereas, in my opinion, IT should be handling all of the other ITCG controls, which includes, anything to do with file transfers, anything to do with the servers. I can go on. And I think there needs to be a clear delineation of that responsibility, because I think I get trapped sometimes when I'm asking for help and they think it's a finance responsibility. I feel it's an IT responsibility. I think we could all do great if we had better definitions of who's responsible for what, so there's less gray. That's just my opinion.
Sounds like a cross-teaming opportunity, so hopefully that'll be worked on. Thank you, Matt, for audit taking up that charge. Leslie?
Yeah, I just, number one, great, thank you very much for doing this. And do you have at this point buy-in, like from purchasing? Is this where this is going to start? And is this a good time to make sure there's buy-in
Yes.
before you get too far down the road?
Fantastic question. I have spoken to purchasing. They're fully supportive of the ideas that I'm bringing up. But of course, the rubber has to hit the road. When you talk ideas and high level, that's great. But, these systems don't get put up until you get into the devil's in the details. So that's what we need to do, is roll up our sleeves and, make sure that, purchasing really is on board with everything that I'm doing, and because I'm open-minded if they want to change things. And also, make sure that the Tyler enterprise system can accommodate those needs. Sometimes you have system constraints, and working through what those gaps are and how do we get around that gap. So Leslie, you're right. That is what we should be working on now, is getting deeper into it. We have actually tomorrow, they're going to give us a demo of this new system, and I'm sure that will make me have more questions than answers, and we'll go from there.
Super, thank you.
Great, welcome.
If I could answer Leslie's question.
If you can just use the mic, just for the, thank you.
There will be buy-in from purchasing in the OFS. No worries.
Thank you. Thank you, Kate.
Harry?
Quite the cameo.
Does this all fit well within the new purchasing manual? Is there anything that needs to be addressed in that manual to really sort of codify anything?
Absolutely. Because like I said, we're the end of the line. We're finance. I don't own or control, or Joan doesn't own or control, that part of it. That's purchasing. And also the departments have a lot to say about that. So this is going to, like I said, it's way bigger than accounts payable and finance. And we're going to have policy changes to support the new system.
Good, thank you.
So, and just because we're kind of on purchasing and something you had mentioned earlier about the shift to Amazon business for Town of Greenwich. You mentioned running a successful pilot. You have a few departments signed up. I guess, how do you envision this rollout? How much overall purchasing? So like, what is the total merchandise value that this could potentially touch? And what do you see as the potential savings both on a cost of supply basis as well as process basis?
Right. That's a great question. Because we have such disparate purchasing, I don't have those numbers for you. And there's going to be inherently, as more departments sign up, more of the purchasing is going to leave, say, a WB Mason and go into Amazon. So I don't have good projections on that. Maybe that's something I can look at a little bit closer. But there's savings right off the bat, like with the free Prime. Each of the departments are individually paying maybe like $1,000, each one of the departments, just to have their free Prime. That's going to go away. So there's hard savings right there. And then we are now linked to part of a network that's going to give us big discounts on a lot of what our orders are. Can I quantify that for you? Not very well, Doug. Again, I'm not a purchasing specialist, but I envision this tool that they're going to be able to give us data that shows us how we're saving money, and that's certainly something that we can share.
Carolyn, thank you very much.
You're very welcome. I'm going to go back to my day job.
Thank you,
Thank you
Carolyn.
all so much.
That's really the highlight of our budget. So if you have, I don't know if you have any other questions on pages 18 or 19, we can wrap that up and, no?
Can I just go back to bank fees for a second? Go ahead, Joe. You asked the question. I mean, where are we?
Natasha is here for any bank fee questions.
I mean, I feel like most departments have migrated to credit card processing, electronic transfers. Is that consistent? And just to be clear, Finance Department covers all the fees for all departments, correct?
That's correct. So several years ago, the departments were responsible for credit card fees, and they felt like they were punished because it was difficult for them to decide how much to put in the budget for credit card fees. And if they went over the budget, they would have to go in front of the BET and ask for more money. So they were reluctant to roll out credit card program. That's why with Ben Brennan, the town administrator at the time, we decided to put credit card fees under Finance Department.
When you say all, enterprise funds, right? Parking?
No, parking pays their own credit card fees. So parking, sewer, who else? Nathaniel Witherell, yeah.
Okay. Joe?
Thank you. If I can go further on that question, I've been running small and mid-sized businesses for some time now, and I haven't paid banking fees for decades. Why are we paying any banking fees at all? You say finance fees, even that, but I'm sure you're a much larger customer than any of the companies I've had. Why are we paying and not, or negotiating these fees down to zero?
Because banking is a for-profit business and they need to generate revenues. So when you say you don't pay banking fees, I don't see how that works. Every check we scan, it costs money to scan a check. It costs money to bring deposit. It costs money to maintain an account. It costs money to keep images of our checks, etc. So the fees are treated differently by banks. You can either pay the banking fees with hard dollars, which $25,000 a quarter, and you send the check to them, or they take it from the account, or you can cover it with earnings credit. So I think when you say we don't pay bank fees, you mean the fees are covered with earnings credit. So we have a combination. We can do either or. And the way we handle it, depending on where the earnings credit rate is relative to interest rates that we can receive on our investments, we make a decision whether to cover bank fees with earnings credit or to pay with hard dollars and use the balances to invest.
So just to clarify, because I know this question has come up before, we have the line item bank fees, which, $450,000, last year was $324,000. Just remind us, how much of that is actually just credit card swipe fees versus how much is explicit bank fees?
Are you mean fiscal year '25?
Sure, yeah.
So in fiscal year '25, if we had to pay bank fees with hard dollars,
Let me just interrupt you.
Yeah.
Because the title says bank fees, but the vast majority of that is credit card swipe fees. Just remind everyone how much of that is credit card swipe fees.
So in fiscal year '25, of 324,000 total bank fees, 299,000 were credit card fees and 25,000 was bank fees. However, 25,000 was after using earnings credit. So the full bank fee for that year, if we didn't use any earnings credit, would have been 176,000. Yeah.
Thank you.
But because we didn't have enough money in the budget, I had to manage it and I had to use earnings credits to cover bank fees.
Can I just go one more question before you go, Harry?
You may.
Thank you. We talk about headcount, 1.2 short on headcount. What problems is that causing? Does it make you just, everyone work harder than they should? Or do we have any problems with the fact that we're short some people? What are those problems?
Our accounts payable department, I would almost argue, works harder than anybody. They, like I said, they process very, very large number of payments. And we've had a couple of things going on this year. So if we had everyone in place, we could accomplish a lot more. Carolyn is dealing with day-to-day issues rather than focusing on where we're headed. She splits her time very well, but the more she gets pulled into that, so once we fill this coordinator position, we're hoping that Carolyn could be out of some of the day-to-day and really supervising and looking ahead.
So with the proper headcount, you're creating opportunities to run more efficiently. And because you're short people, you're not able to accelerate into those opportunities.
Absolutely.
Thank you.
Harry?
Have we consolidated to one provider of credit card services?
No.
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 How many are there?
We work with 4. And the reason why we have different ones is because different departments use different systems. So for example, Parks and Rec, they have RecTrack to collect payments for, beach passes, et cetera. And the main credit card provider that the town has, which is called Eleven, they were compatible, but the system that Parks and Rec uses, they prefer Card Connect. So we'll let them use Card Connect instead of Eleven. Then parking department, they work with Fiserv because this is more compatible with the meters, etc. So it depends on what department we talk about. Also fees, credit card fees. Because if you think about it, some departments have large, like building department, they have large deposits. In this case, it's more advantageous to have a fixed fee of, let's say, 10 cents per transaction rather than percentage. But if you talk about IT, where, average transaction size is $1 or $5, then it's better to pay percentage of the transaction.
Okay, so you've obviously looked at the fees on each one of
Look
them
at them
and
every month.
driven that down as much as you can. Okay.
Correct.
Great, thank you.
Elliot?
Thank you. As chair of the IAC, I just wanted to add that we're very careful about looking at the fees we're paying across the board. And in simple terms, what we do really is do everything in comp. So we generally are checking with a few different providers before Natasha buys a treasury bond. For example, we'll check who's got the best offering. And I think Natasha did a very good job in explaining, there are fees everywhere. Some of, the banks don't always disclose, very openly what those fees are, but their fees are always there. And Natasha is always looking at them, so
I do believe that nothing gets by Natasha.
that's true.
I confirm that, yes.
Can I just ask around payments, just a broader question? You know, like during the parking services audit, we were talking about the cost of moving all the coins and coins get lost in the machine, blah, blah, blah. And like the hurdles there, yeah, whereas in this case, we have an explicit credit card fee. I guess when you think about, you know, the government as a whole, I understand we eat a 3% fee on credit card, but if you think about what the actual costs are to our town, some of them are not going to be explicit like that. Are we beneficial, or do we benefit financially by continuing to make a push towards electronic payments?
I don't think we looked at this from the point of, is it more beneficial financially? It's more about convenience to the customers. So some customers come in and they don't have a checkbook, or they don't have enough cash to pay for, you know, a building permit, and they wanted to be able to pay with the credit card. So that was more a convenience decision.
But I guess, let me follow on that, because it would, to me, it would be, if you have a lot of implied costs with cash handling, management, potential loss, whatever, it would feel that like having this go higher because we're making a push. I understand wanting to give residents a range of options, but it would seem that it would make sense from kind of a systems perspective, similar with the AP, that we want to be pushing departments to move more towards electronic payments. Even if we have one standalone explicit cost, you would expect to have savings elsewhere. Is that
So from the point of view of risk, I agree, credit cards are probably better, but from the point of view of cost, depositing a check, it costs us probably 13 cents, while a credit card fee is 3%. So think about some building permit that's $10,000. It's cheaper to deposit a check.
Yeah, I just mean more on smaller dollar transactions. I agree. Same with like property taxes, where we charge, or residents have to pay the credit card fee if they use a credit card to pay it, right? Okay, anyway.
All right, thank you very much. Should we move on to revenues?
Okay, there is a PowerPoint that will be going up, and you can go to the revenue section of the budget book. Also, just going to take a brief minute here to kind of do an overview of the budget schedule section of the book, because I don't think there's any other time where this gets brought into the eyes of everybody. So the first selectman's recommended general fund operating, I mean, this is review for most, but just to make sure everyone's aware. And the capital budgets, the total amount to be financed is $543,544,685. And you can see, if you look in the budget schedules tab for 26, 27, the mill rate calculation page. And just to review that quickly, so
So it's
if you
budget
go-
schedules, the first page.
obviously, these are key schedules as we move along in this process. So just with 6 new members of the total BET, just want to, kind of bring this, just summarize it. So the 543 million is 4.33% increase over last year's budget, as you can see on that schedule. The mill rate necessary to fund this budget represents a 6.01% increase prior to the BET and RTM review and approvals. The estimated grand list increase growth in this assumption is 0.75. This is before the 2025 revaluation. The BET will use the post-reval grand list at the end of the budget cycle. So just want to make sure that that's, kind of clear to everyone in the public. The preliminary mill rate calculation requires a 6.81% increase in the required tax levy. The required tax levy takes into consideration revenues lost on tax settlements of $1.5 million, state elderly tax relief of $150,000, town elderly tax relief of $850,000, and the estimated loss on collections of $3.13 million, which assumes a collection rate of 99.33%. The largest revenue source is the grand list. For budgeting purposes, like I said, all work is done pre-reval. To calculate the final mill rate in May, we'll use post-reval. And just a comment, Greenwich has the largest grand list in the state of Connecticut.
Sorry, is Leo meant to advance the slides? Because that hasn't been happening.
Yes, I don't have access. Sorry, Leo.
You just have to give her a cue, okay?
Q. If you go, there you go, perfect. This slide shows the grand list growth pre-reval, just so that you can kind of get an idea of kind of 1% increase over the past, since the prior reval in 2020, which shows here in 2023, which was done in 22. If you go to the next slide, you will see what the grand list growth looks like post-reval. Your meeting, Lauren will be presenting later, but the post-reval net grand list is $46.2 billion. That's up from $36.8 billion. Again, that's just FYI only. Next slide. Here you can see the mill rate change. One thing to note there, that the net change, the percent change, has been running below inflation for many years. Again, the 6.01 is as submitted. So the required tax levy on the next slide. Again, based on the submitted budget, $474 million is the required tax levy, and you can see the progression. Next slide shows the calculation of the required tax levy. We factor into account the tax settlements, elderly relief at the state and town level, and the loss on collections, which we usually do better than that. Use of fund balance. So the fund balance has historically been used to balance the budget. And again, just wanted you to see the history. In recent history, and I would say in all of these years, I'm sure Pete can correct me if I'm wrong, while we budgeted a use of fund balance, the fund balance was not actually used. So where we budgeted $23.8 million use of fund balance, in fiscal '25, we actually had a slight surplus. It's budgeted that way conservatively, as you've been digging into, so that I think it's just evolved over the years, so that we can be so that we conservatively budget, but then we offset the use of fund balance.
Joan, I just want to point out that fiscal '27 is a projection, so nothing has been decided.
That is correct, and yeah, so that is as submitted. Thank you. Next slide will show you fiscal '27 top revenues, property taxes, all inclusive, $471 million. Interest income, again, this is as submitted, $5 million. Conveyance taxes, $6 million. We're going to be going through each of these in a future slide. Building permits, 5.2. State aid, 4.589. Cancellation of encumbrances, $2 million. The Peterson Trust, $1.2 million. And membership cards, including beach and tennis, $1.6 million. Starting with property tax.
Excuse me, could I ask you a question? You've got 471,400 up there for property taxes, but in the book, property tax revenue is 468,600.
So the difference is, It includes, it does reconcile, it just includes a couple of the adjustments. I could send that to you
Okay.
separately.
Okay,
It
because
it does reconcile.
I think it's important to know this number because that's, you've got total financing up 4.3%, and that's been promulgated to the public, but really the property tax revenue of
What is,
almost 7% increase is, I think, significant and needs to be understood by the public. So-
yeah, I think it's I'll do the math on it, but I think it's the prior year, it's the other adjustments, the interest on the delinquent taxes and the prior year collections.
Okay, thank
So-
you.
This is just a breakout. Property taxes represent 90.35% of total revenues. On the next slide, again, just showing you the trends. We have interest on taxes for delinquent accounts. In this current year, fiscal '26, we had it was a sale of there was a large amount related to one property that we were able to recover interest for 4 years, I think, so. So year to date, that's helping us this year, but this has been an area that we have exceeded the budget regularly. And again, so that amount that we receive over the budgeted amount was offset the use of fund balance.
So just so we can follow along if we're in the book, this is under 139 tax collector where we can see this, the prior year taxes and the interest on delinquent taxes, correct?
That is correct.
Page 6, under 139.
Oh, I'm sorry.
And just to explain that a little bit further, when taxes accrue on, delinquent taxes accrue, once the interest accrues at a healthy rate. I can't remember the rate at the top of my head, but it is a healthy rate.
I should know that.
18%, I know.
I thought it was
Yes.
18%, but not compounded, I think is the
I will
number.
get back to you on that.
Yeah,
Or we
that's
can
okay.
ask,
But when the property
yes.
sells, we're the first lien holder, so. we get
that's
the money.
correct.
Yeah.
That's correct. And as such, we don't even have a reserve for uncollectible real estate taxes because we'll collect them eventually. Slightly different, most of the uncollected are motor vehicle and the business property taxes.
And I know there is a statute of limitations on that, and I know audit keeps track of that. So every spring, they look at those properties.
Audit and, yes, part of the external audit, because that is published. Next slide is prior year collections. This can really vary by year because sometimes there are prior year refunds. So last year, fiscal '25, this number was lower as there were some prior year refunds offsetting. But this fiscal '26, we're at 1.1 million, so we're pretty much right on target. Next slide is building permits. We discussed this a bit with DPW 2 days ago, just to chart it out, and so you could see the fiscal year. I put a projection in, even though DPW is not willing to give you one. It is conservative, but again, just to get an idea of where it's been. Special education reimbursements, 1.8 million is what the state has once again committed to, at least preliminarily, in their budget. The next slide is state aid education cost sharing. Same thing, the funding amount is holding consistent, at least what's been preliminarily provided to us. Next slide is state aid. It's actually federal and state reimbursements. This account, there are two different account numbers, 43137, and historically it's been in 44625. You'll see it in the book, or it's kind of known as the 1.8 million that was in the budget last year, for which there's zero in there this year. This relates to funding from grants for DPW projects. And we are, at this time, proposing a fiscal 27 budget of 2.5 million. And I have a detail. There are 3 different grants that we are expecting to receive funds in fiscal 27. And this is working very closely with DPW.
All right, so let's just stop there for a moment. So right now in our budget book, there's zero budgeted for this versus 1.8 last year. And you're saying that based on known projects and working with DPW, that there is a positive variance of 2.5 million to this line item. Is that correct?
That's correct.
Okay. And you're going to give us detail at a later point?
Well, I have the details, so I can send it to you. But there are 3 projects potentially that we could receive funding that year.
Leslie?
I just want to confirm, that's coming to all the BET members, correct, Joan, when you send these responses to these questions out?
Yes.
Thank you.
David? Thank you, Harry.
The slides you're showing now, Joan, will you distribute them to the BET?
Yes.
Thank you. And the explanation that you just were referencing. Good.
I'll even clean up this page, all my parentheses that I didn't edit.
That's all right, Joan. You don't have to do that. We'll figure it out.
Just noticed. Okay, the next page is payments in lieu of taxes, pilot, tax exempt properties. Again, we have this number from the state, but it's actually a little bit higher. We would make this adjustment just to make it, it's small, but the correct number would be 1,111,003. And we just received that, so. We just received notice.
All right, so just so I can follow along, so on page 2 of the revenue schedules, which is a continuation of the state grants and aid, so pilot tax exempt properties, which is budgeted at 1083620, we're going to adjust slightly upward to 1111003.
Correct.
Okay. Yes, Elliot?
Does that include the latest settlements with GCDS? And
So that's a great question. It does not, and to be honest, and I don't know if Lauren will speak to this.
Lauren was just here a moment ago, but
But
she had to leave for a
she-
moment.
The final agreement referred to this, a pilot, because they called it payment in lieu of taxes, but it's not a true pilot. So a true pilot to us is where, this is Yale New Haven gets tax relief, and the state pays it. They give us funding for that, where in this case with GCDS, it's truly a payment that they are making to us directly for those properties. So we will be accounting for it differently. And it would not be in this. It would not be here. And because there are payments associated with that as well, as you know, we are having that will roll into taxes. So we can talk about that more, but it is definitely not in here.
Yeah, let's hold that question. So this is specifically Greenwich Hospital?
Yeah.
Thank you. Was there a little bit for Greenwich Communities, or?
The majority is for Greenwich Hospital. I feel like there might be something else a little bit, but I can get back to you on that. Okay, next slide is conveyance taxes. Based on trends and current year to date, and it doesn't seem like it's slowing down too much. We're projecting almost 8 million for fiscal '26, and the budget for '27 is 6 million. As you can see, though, historically, this conveyance taxes have always well exceeded the budget. Again, this was another place where we made up for the use of fund balance in the budget. Because you never know when you might have a 2020 or a 2019 when, things changed.
And this is just the town portion, obviously, not the state portion.
Oh, this is just the town portion. The state gets much more.
Yeah. I mean, I would be a little concerned to try and bump this number just because of our low inventory in town of real estate, and it can be very volatile.
We would agree, and I think in the past, that's always been the thinking.
Excuse me, Joan. Sally?
Joan, thanks for that explanation, and I know this came up in another meeting, the conveyance tax. So this is on the transfer of a residential property in the town of Greenwich. The state collects the taxes, and then we get a portion of it. What is our share? Is it, I just don't know if I've ever seen what the town's portion is.
We get .025, and we actually collect it, and we remit to the state. The state has levels where if you're over 2 million, it's 2%. So while if it's below 2 million, it's closer to what we get. I forget, but it works its way up to a 2% for over 2 million. So they've done very, very well this year.
Any other questions? All right.
Next page is tipping fees, and I'm going to skip that because you spoke about it yesterday. I actually meant to take it out. So we'll go to parking fines. Year to date, we're 604,000. We're keeping the budget at 900,000. As you know, the parking fines go to the general fund.
Excuse me. Leslie?
Yes, does this include all of these new ticket fines, the automated speed?
It does
No.
not.
It
It
would
does,
not be parking.
it does not. So we're
No.
going to talk about that this afternoon with the police department.
Okay. Well, I just want to make sure.
Next slide is interest earned on investments. Another one I know we want to spend a couple minutes on. We did preliminary, I should say we, Natasha, did preliminary calculations of interest for fiscal '27 early on before it became apparent that there were going to be fewer interest rate reductions by the Fed. As a matter of fact, our experts, both sets of experts from Neuberger Berman and Morgan Stanley, and both were predicting 6 interest rate cuts at the time that we did our initial calculation. As everybody knows, that's changed drastically. And I'll let Natasha kind of go through this, if you'd like. But our current calculation is closer to slightly above 6 million. And on, I don't think I did not put the calculation in as part of the slide, but Natasha has done a detailed calculation based on the highest probable outcome that is currently being estimated by the quote-unquote experts. And so that's basically using an interest rate of 3% for, and she does it based on monthly averages for 10 months of fiscal '27. It comes just over 6 million. Do you want to add to that?
I think that IAC has this on their agenda for Friday. Is that correct, Elliot? Are you planning to look at this and perhaps give the Budget Committee a recommendation? I mean, I'm happy to listen to Natasha, but I think we can do that. We can do that as well.
Yes, we are, and I've worked with Natasha. Natasha's run some preliminary numbers. The plan is to have a little discussion on this, get everyone's input, but the expectation, I don't want to get ahead of myself, but the expectation is, I think, that number is probably a little too conservative and will probably end up increasing that number, again, based upon what we know now that's already in the market. I think it's, it's going to be reasonable for us to expect slightly higher interest income for the next fiscal year.
All right, so Natasha will get into her assumptions at IAC, and you'll report back what your recommendation is, but
Exactly.
definitely not the $5 million that we currently have budgeted. Harry?
Yeah, I just want to make sure we maintain our past practice of underestimating interest revenue, because that is, the conservative way to do this, so.
I fully agree.
Okay.
I absolutely fully
Thank
agree.
you.
And that, I've made that, I've made that opinion public for several years now. So when I say that I think we will be raising that number, it's from sort of a conservative vantage point.
Right.
That the number will likely exceed that number.
Okay, thank you.
But thanks for pointing that out.
So next slide shows cancellation of prior year's encumbrances, and just so that you all know that every department kind of at the end of the year estimates what they have, it's encumbered funds, so whatever they have on open contracts. We close out the POs they should all be closed by now, but that's another thing that we're working on, being more timely on, and we need every department to have buy-in that we close out all prior POs within the first few months of the new year. But as of now, for fiscal '26, we're at about 2.5 million of canceled encumbrances. So this is another area that we have budgeted conservatively traditionally. And by the way, when the POs get closed out, the departments don't get credit for it. It just goes to a general account of reversal, this revenue account. Next slide is the Peterson Foundation, more or less fixed by contract with Peterson. So not much change there.
Can I actually just ask a question about this one? Just because if you look at it, we're 100,000 below the budget every year for the last 5 years or longer.
Yeah, I'll have to, I don't know why, so unless Pete knows. I'll get back to you on that.
Pete, if you have the answer at the ready, please feel free to come sit next to Agnes maybe and use them, thank you.
You want me to answer that?
Yes, please.
Is this on? The Peterson Trust number, the revenue, has a reciprocating expenditure in the expenditure side. Traditionally, we budgeted at 100%. So even though there's a savings on the revenue side, there's an offsetting, a dollar for dollar savings on the expenditure side. So it's basically, it's mill rate neutral between the two. Does that go to your question, Doug?
So what you're saying is there's a contra revenue here that then wipes out an expense elsewhere?
Correct. There should be in the Peterson budget, in the library budget, the same
Got it.
expenditure, okay? So we know that the expenditures are, traditionally, they're under budget by, to your point, like about $100,000. So the savings that you see in the revenues are not technically savings because they're offset dollar for dollar on the expenditure side. So it's a wash between the two.
Thank you, Pete.
Thank you, Pete.
So the expenses in the libraries tab, 702 Peterson Foundation, and this is the business library, so this is a bequest and an endowment. So you can see the expenses, 1234273.
And then on the last page, pages 12 and 13 in the budget book, you'll see the transfers from other funds representing benefit and related costs that we basically get revenue in the general fund. So golf, 404,000, lease railroad, 163, CDBG, 56,000, parking fund, 670, school lunch, 501, Board of Ed grant fund, we charge them 893, for all those employees. Retirement reserve, 98,000, sewer maintenance, well, that's the sewer maintenance charge. And then Nathaniel Witherell, the 5.7 million is it's their benefits. So we basically are charging Nathaniel Witherell for the benefits. And for the, one thing we did a little bit differently here is this is based on trends. So we didn't budget that based on budget. We budgeted based on actuals. So that 5.7 is lower than prior years.
Any further questions? All right, so just to recap, maybe for the benefit of the minutes, if we look at state grants and aid on page 1 of the schedules, federal reimbursement budgeted at 0 is going to go to 2.5 million, because these are adjustments we'll make at the Budget Committee on decision day. Special ed excess cost grant, we're keeping the same at 1.8, no changes there. On 43444, local capital improvement project, I'm not entirely sure what that is. Is that the paving reimbursement? Because that has come down. If we could maybe investigate the reason for that. It was 461, 198, now it's 325.
Yeah, I'll get back to you on that.
Okay, and education cost sharing is a number we recently, it's a fixed number that we get from the state. We've been notified there's no increase, but there's no decrease either. So we're pretty comfortable with that number. And the same with the pilot, that's a known number. And then on conveyance tax, 6 million, we're keeping that as is. We're being fairly conservative. Same with building permits. You've made an adjustment of 250,000 increase based on trends, and that's something that you're comfortable is conservative, or relatively conservative based on trends?
Yes.
And then interest, there's probably room to go from 5 million to 6 million, but pending further analysis by IAC.
Correct.
All right, tipping fees, we did discuss. Fire department, we had a new fee for a plan review. It seems like they're trending ahead of budget for 6 months. But because that's a new fee, we probably will likely keep it the way it's been budgeted. I don't know if you had any input in that or if that's a number that came from Greenwich Fire Department, but do you have any thoughts on that one?
No, I think that was our thinking.
That was your thinking?
Yeah.
Okay, excellent. Any further questions on?
Very good presentation, thank you.
Thank you.
All right, are we ready to move to fixed charges?
Section
Does anyone
3.
need a break? Are we good?
No breaks.
Okay, we're powering through.
Megan's been waiting patiently.
All right, so we're moving to the fixed charge tab. Are we going right to insurance, 908, or do you want to give an overview, Joan? Do you have a presentation?
Yeah, we have a presentation, and Megan doesn't mind. We'll get there when, in order. Now. All right, so the fixed charges budget amounts to 191 million. This is an overall increase of 5%, or 9.18 million. So on the first page of this of the slides, I show the largest dollar increases, being healthcare costs increased by 9.6 million, or 13%. Healthcare employee contribution, 1.4 million increase, or 11.7%, for a net healthcare increase of 8.195 million, 13.3%. We increased the contribution to the risk fund by $1 million, for $1 million, and then contribution to capital projects to the Z fund, 885,000.
Doug?
Can I just ask a question here? Just for forecasting, the growth healthcare expenses are up 13%. Why would employee contribution be up less than the 13%?
So for the employee contribution, what we do is we do a projection of the enrollment of the employees as of October 1st, 2025. So we calculate the employee contribution based on what they elected to be their benefits at that point in time. And then we increased that by the 13% of the healthcare and then multiplied that by the contractual employee contribution. That's how we came up with that number.
Doug, we understand your question regarding trends and why and reconciling the difference, and we are working on that, so more to come on that. Because Doug's point is that seems to be understated,
Based on existing.
based on trends and the
existing
actual,
contractual agreements.
yeah. However, it was calculated using an actual database, so we're going to work on that a little bit.
You've got a 13% number for healthcare costs, but there have been rumblings that it's going to come in higher than that. When are we going to actually know that?
So we'll get I don't know if.
They just slipped in.
Yeah, the beginning of March.
Prior to our budget decision day?
Which is,
That's March 2nd, so that is truly the beginning of March.
Yeah. March 3rd.
I can't give a definitive date, it's up to the state.
We're kind of
So it may
dependent
come
on
in
the
after our
state.
decision day. March 3rd is our decision day.
I don't think we'll have it on March 3rd.
Right. Yeah, okay.
Allison, while they're here, correct me if I'm wrong. The state is most likely it's not going to go down. It's most likely going to go up. So you can still make your decisions based on knowing that their last estimate was 14.5%.
They're saying between 12 and 15, but it's likely to be closer to the 15.
Yeah,
So
so
just to repeat-
14 and a half is probably a good number for our assumption purposes.
Yeah. Just to repeat what Allison said, the range is 12 to 15. That's what they've been saying. So I just wanted to have that on the.
But maybe when we get to decision day and we're trying to do things, we ought to be working with a 14 and a half number because it would be better to have good news than bad news going forward.
Well,
If it was
Agnes-
less than that.
Agnes, help us understand the assumptions that underlie this amount. Is it the employees that we have as of October 1st? Based
Yes,
on their, do we
that's right.
include vacant positions?
No, just
No.
whoever's
So this
there.
is existing census
Yes.
is carried forward
Yes.
for purposes?
Yes.
Okay, thank you.
The next slide has the largest dollar decreases. The retirement pension contribution is decreased by 2.4 million. OPEB contribution decreased by 71,000. Despite their large gains, just keep in mind that OPEB ADEC is calculated using healthcare costs, and that's why it didn't come down as much as you might have expected. And then the contribution to Nathaniel Witherell is currently in at 2 million. I think we're going to hear from them that, and this, just so everyone's aware, there's a lag, a couple-year lag on funding losses at Nathaniel Witherell. So it's not a one-year lag, and this year there are 5 million, for fiscal '26, we have 5 million of funding related to prior losses. So, but the current year losses are building, so we just might want to keep that in mind. But preliminarily, we had put in 2 million.
So I'm a little confused because I thought it was just a one-year lag. So you're saying that this 2 million you've got up on the screen is fiscal '24?
It's whatever, it's kind of always a catch-up, because the big year of losses at Nathaniel Witherell was fiscal '23.
Right.
So the 5 million that we put in here now partially is covering that, because we haven't had a 5 million year. So I think it's kind of what, it's at your discretion, but just know that, well, because of the 5 million funding this year, if they lose 5 million, it's not going to grow. But we do have prior losses building. So
Yeah.
I think the fund balance is 6 or 7 million. Negative, sorry,
thank
not the
you.
negative fund balance.
Negative, yeah.
Sorry. You know what I meant.
Yeah, we'll have a bigger conversation Tuesday.
Yeah, exactly. So now we kind of get into
Well,
the,
just to put a fine point in that, are you considering changing that 2 million contribution, or is that something that you're comfortable with? Or TBD?
that would be TBD, but really in discussion with what we've talked through on when they present next week and kind of, your thoughts in general.
Okay.
We're okay with the 2 million, just know that, that negative fund balance is not going away.
But actually, this slide is 2 million is a dollar decrease.
That's a decrease. That is wrong.
Right.
It's 3 million, because we went from 5 million this year to 2 million. Good
Okay.
catch. That's on me.
Yep, thank you.
The contribution is 2 million. It's a decrease of 3 million. Of that 3 million, 2 million went to fund balance, 1 million went to risk fund. That's how we did it.
Right.
Exactly.
Maybe, maybe before Tuesday, you could give us a history of,
Don't we, sorry, I'm looking at the budget schedules. Don't we normally show that on the budget schedule?
Yes. Is it not?
It would be on the Nathaniel Witherall tab, right?
It's on the page 148.
it's in Nathaniel Witherell tab, right?
No, I'm in fixed charges. You can also see it on the Nathaniel Witherell tab, but if you look in fixed charges, page 148, it shows the transfers to and from other funds.
All right, sorry, I'm looking at the budget schedules of the mill rate calculation where we show use of unrestricted fund balance. I thought we used to show contribution to Nathaniel Witherell for prior year losses. My memory might be escaping me, but I thought we showed that on the mill rate calculation page as well.
I don't know, but we can, if you want it separately broken out,
Okay, well,
So on
but I don't know.
148, we stopped the $500,000 number because it was, I'm sorry, so on page 148, we stopped the $500,000 number because we decided it was kind of meaningless.
Well, remember, they were also projecting a
Yes.
break even. So I think that was
Right.
to be consistent with a projection of break even. So that was
So-
to fund, yeah.
This is, but the line of 57,131 is Nathaniel Witherell prior year losses.
That is correct.
So this is where it shows that it went from 2.3 for the fiscal, for the actual 24-25, which was a prior year, is reflecting a prior year to the 25-26, 5 million. And in 26-27, it's projected.
Well, we have in the budget right now
at
is
2
2.
million, which is a $3 million reduction, but it's probably going to be higher than that 2 million projection.
Again, I see it more as kind of just a little bit discretionary, but because it's not ever matched up prior year losses exactly. So historically,
Okay.
it doesn't line up, but
I think it would be helpful for our discussion on Monday to see a 5 or 10-year history on not a prior year basis, but on a fiscal year basis, what the losses for Nathaniel Witherell have been. If you could send us a schedule prior to Tuesday, I think that would be good to have.
no problem.
Thank you.
Want to see that?
I think it's important
You
for the
might not
public.
want to see that.
I think it's important for the public to understand how much the losses have been.
Being facetious, I agree with you. Yes.
Thank you.
Okay, so moving on. Now, these slides we can go through pretty quickly because it's really just showing you the trends over time. So employee benefit, well, the next, we're going to go through retirement. You can see the declining ADEC. If you go to the next slide, the town match for the defined contribution plan. This is also estimated based on the October 1 enrollment. the 3.6 million. The next slide is sick and vacation payout. This basically represents if you have somebody who's been here a very long time and a department cannot absorb when the payout when that person leaves, that's what this budget is set up for. It should start to decline now that it's been a while since anybody could qualify to have your sick pay paid out when you leave. So that would only be employees who've been here for a very long time. So it'll just be the large vacation payouts, but those aren't usually as big.
Sorry, can I just ask a question specifically on that? You made a comment that you're expecting that to come down, but we're budgeting for it to go up?
I'm saying eventually. It's somewhat it's somewhat hard to predict because it depends on the, who leaves and when. It will come down eventually just because there'll be so few people left that will get paid a sick payout, but there's still plenty. I don't know if you want to add to that.
The sick payouts.
Need a microphone. Sorry.
Thank you. Most of the sick payouts are people that are entitled to get paid out for sick time are grandfathered in. Some of them go back like to people that were hired 30 years ago or more. So to Joan's point, I think those are going to go down over time. Vacation payout is required by law that people are entitled. We can cap, how much people are allowed to carry over so that they might have more in 1 year than their normal allotment. When we do cap that, we have a cap. But like I said, to Joan's point, the sick payouts are eventually going to go away because it's mostly long-term employees.
Just yell if there's anything. Next page, contribution to Social Security, increase based on salaries. Next page is retiree health savings account, that's a HSA contribution, unchanged. Healthcare we've touched on, so again, you can just look at the trends there over time. Obviously, we budget based on budget to budget, so you do see the variances to actual there. Bless you. So that's also something that we are looking at, but just to keep in mind, if we were to adjust that closer to actual, we would also need to adjust the use of fund balance. So that would not, bless you, that wouldn't end up being a net savings. Next page is employee healthcare contribution, which that we can further discuss the calculation. Next slide is employee group life, stays consistent. Following slide is OPEB contribution. So you can see that has dropped somewhat. The next page is special accounting. These are benefit chargebacks for the Peterson Foundation personnel. And the next page is 401k match, which we are budgeting flat. Department 902, the unemployment compensation and workers' comp. This account includes both the costs associated with workers' comp and unemployment compensation. So on the next slide, you can see the trend for workers' comp. This is handled by HR, specifically Tiffany, who works with Karma, our outside administrator, for all of the kind of the research and the tremendous amounts of follow-up on these claims.
So the fact that this is flat, is this good news? Is this fewer claims, better administrate? What's the story behind?
We actually have a pretty good track record with workers' comp. I mean, we have very aggressive safety program. We have a staff position of a certified safety analyst. We have a number of safety committees throughout the town. So the key with workers' comp is just to successfully manage the claims once they happen. But even more important is to prevent them from happening. And really, every department is really committed to this in terms of working with us and our safety analysts on it. And I think that we were talking about doing a presentation about it to the HR committee that would explain a little bit more how we handle all this. But our trend in claims has been really good. Unfortunately, no matter how many precautions you take, occasionally something does happen, but. So
Thank you,
yes,
Mary.
it's good news.
Okay, so now you can turn to page 145, and that is our insurance page, and anything that, that Megan can cover that's public, because we don't always want to point out exactly what all our limits are, but I'll turn over to Megan.
So Megan D'Amato, I'm the Director of Risk Management for the town and for the public schools. The fixed charges that are under my budget are mostly insurance related. What typically drives the numbers up would be the casualty program. So that's your slip and falls, anyone has a personal injury case, those types of cases. We have it structured in a tiered structure so that we can get enough capacity. I won't say all of the numbers out loud unless you prefer I do. The excess workers' comp, so to go back to, I echo what Mary Pepe just said, they do a fantastic job at keeping claims down, keeping those numbers within reason. We do have an excess policy, and that is, there's a self-insured retention of $1 million. So any claim that's under that is paid by the town first, and then if there's a larger claim, it will go to that excess policy. So we have the casualty, the workers' comp. Workers' comp is also based on payroll, so we don't have a lot of control over the premiums, but they do see our safety program and everything that we do to keep claims down, so that does come into effect a little bit. Auto physical damage is the one other one that's kind of driving things up. That covers the fire trucks when they're in accidents. They're extremely expensive to cover. Some accidents are on our side, some are third party. I don't know if you've heard of some of the more major accidents. We've had to replace a few fire trucks, unfortunately, and so that kind of drives that number up. There's a $15,000 deductible on that, so anything above that would cover those fire trucks. The one other one that is a larger premium is the property. We're covering all property throughout the entire town, so that's a large amount. We have a statement of values. I'm currently working with all of the different BCNM, Nathaniel Witherall, the different facilities managers over at Board of Ed to make sure that all of the information is accurate in there. I try to follow the capital projects, the building committees, and update things as we go so that to make sure that everything is fully updated. This year, we're doing a whole revamp of the whole statement of values to make sure that absolutely everything on there is accurately reflected. It's not just values. They're talking about what type of roof you have, what kind of structure you have, flammable materials, all the COPE information, all of that type of information. So that will be fully updated again this year. In the future, for now, Chubb has allowed us to just increase values based on trending. In the future, we may have to go in and do actual appraisals, which are a little bit more expensive. So that may be something in the future that we would have to talk about putting into the budget. But for now, we've been able to just increase based on trending, and Chubb is comfortable with that. Is there any other?
Harry?
Yeah, if I could jump in, the fire truck collision, my understanding is we self-insure for the automobiles, right?
Yes.
Okay, so it's just trucks that are insured, or DPW trucks insured?
No, it's the fire engines specifically.
It's just the fire engines?
Right.
Okay. So we've got a $36,000 increase budgeted there. Can you remind us how much we collected on that engine that was destroyed on Route 95?
95 was 1.2 million, yeah.
We
it was-
collected 1.2?
Yeah.
I thought we
That was-
collected less.
No, we fought the insurance company for actual cash value.
Oh, I
So we
hadn't
were
heard.
able to get, we were
That's
able to get more
terrific
back.
news. I hadn't heard that.
And they
So-
were able to replace that truck.
Right.
So,
Okay, and then did we collect on engine 53 that was up on Lake Avenue?
the one that was tangled in the wires?
Yes.
Yes, that one was less. That one, I think, was, I have to look back at the
It
numbers.
was more like 150
It
or
was,
something.
yeah, or 200,000, somewhere in there.
100,000,
Right,
something
right.
like that. And then there's a big change on marine operators and liability, but it's sort of, it's masked because the actual in 24, 25 was 121,000, went down to 16, and now it's up to 235.
Yeah, so we did a little bit of reclassifying. We're trying to, like in other areas we're doing in finance, we're also doing it in this budget, trying to reclassify things so that they're more accurately reflected. So in past years, they were kind of, some of the payments of premiums or budgeting was going to different lines. This number more accurately reflects the different, because there's excess policies. So there's the primary policy, and then there's excess policies. They have the hull and machinery, there's marine operators, legal liability. So what you have submitted now in the budget is more accurately reflecting where
so
those
it's
premiums
those-
should go. So it's
It's
not
those two lines, 050 and 070, that really net out to be,
right.
yeah.
Correct.
Okay, and then my final question is on the liability policies. We've got big increases there. Is that reflective of anything internal, or is that just market?
There was a large payout at the end of December 2024 on a lawsuit, and so that will hang on the account for at least 5 years. And they do look at that when they're
Okay.
pricing out the policies, so
Right.
that's what drove that.
Wonderful.
Yeah.
These are big increases.
It is, and so the budget comes from Gallagher, our insurance broker. I work with them on it. They know the market better than we do. And so they base it on what's going on at the time, and they're conservative, because they know that we do like to budget conservatively. So oftentimes, they will come in under the numbers, maybe not significantly, especially for casualty. That is a very difficult line to place, but they will often come in under these numbers.
Okay, thank you.
Can I ask about the museum collection? Can you just remind us, is this the entire Bruce Museum? Is this the old building? Do you happen to recall?
So the fine arts covers all the fine arts that are in the building at the time.
Okay,
The property covers the entire building.
okay.
I know there was some discussion back and forth about that. I did meet with Attorney Amina Ahmad on that, and we looked at all agreements and amendments and didn't find anywhere that said otherwise.
Okay, so the town is.
So it is, they are carrying those costs, yes.
Sorry, they are or we are?
No, I'm sorry, the town. The town is
Town is,
carrying the
okay.
costs,
So
yeah.
that's on the new building, the entire building?
The fine arts and.
No, the property.
The property covers the entire building. They do have some insurance on their side as well for personal property and some other things.
Right.
But the
Okay.
building is carried under the town's property program.
So when they have special collections or programming or exhibitions, is that a rider on the existing policy?
So that causes a little bit of trouble in trying to budget. We've gotten a little bit better about that, getting the communication over to my office so that we can then add it to the policy. There were times where we were mid-policy and I would get this large increase and we'd have to carry this additional premium. Luckily, many of the others came in under and we were able to kind of carry that without having to ask for additional funding those years. But we have had the discussions with personnel over at Bruce Museum that are in charge of that to make sure that they get us the information as far in advance as they can so that we can have that information in the budget.
I somehow knew Leslie Tarkington was going to have a question. Go ahead.
Right. I do know that when we negotiated the agreement for the Bruce Museum, I actually was the chair of the law committee at that time, and it was to be a 3-year agreement that we would carry the insurance on the property through the construction, because otherwise it was going to be difficult. But the whole agreement was to be sort of like a construction period. And so the coverage was for all the collection. It was also for, and of course, the law cases have made some different issues on that needs to be reviewed, but also in the building. And that after that period, it would be reassessed and everyone would look at the whole numbers, and it was a good way of doing it. However, what happened is, I believe, is that when that agreement went to the RTM, they said, oh gee, why 3 years? Let's make it, whatever it is today. And so they extended the agreement that was only supposed to be for the construction period to be forever. So I do believe that they are absolutely correct, and that is the way the agreement was written. But there were some other things in there, too, that were to be balanced out after the project was completed. And so it is what it is. I mean, the agreement is there.
Harry?
Yeah, are you talking the construction of the current new building or the construction of the previous new building?
No, obviously, I was talking about when I was on the chair of the law committee, which was recent. We were carrying all the insurance on the original building and the addition. I think that's what you're talking about. But no, I was talking about the new $60 million addition.
Okay.
Thank you.
Agnes, do we have that agreement? Is that part of what's in our?
Well,
We have an older agreement, but I don't know if I am familiar with this agreement that you're referring to.
I can't remember, but I believe it was the
think it's
Second
quite a few years
Amendment.
ago.
And I think we do have
it
it
the
in
Second
our
Amendment?
documents.
We have the original agreement and the amendments, and we've been recently reviewing them, and even Kate Bush was even asking us yesterday. I think there are some things that need to be clarified.
Yes.
So it's kind of an in-process.
All right, I'm glad to
thing,
hear
but
that it's in
it's-
process.
Yeah,
But
okay, so
it's-
this
I
is
think
where we are, but maybe this is
where we
something we
are.
can look further into. I do get concerned about the special collections and exhibits because I know it's an amazing facility and we're attracting very high caliber collections and exhibitions. So I want to be sure that, we don't, that's a big job, so.
Just for the public's information, I've heard from various members of the Bruce community that the contribution, which is in a different section of the budget, external entities ought to go up more in recognition of having expanded the footprint. But the town's contribution in effect did go up because of the requirement to insure the additional square footage. And that's probably, I'm guessing, a 50% increase at least in square footage. So the value of that portion of the policy is probably significant.
I believe we broke out the numbers previously, so I could send that to the
I
BET
would
of what
appreciate-
portion of the property, and we could update it according to what we have
I think it
now.
would be very interesting information.
Sure.
Thank you.
Sure.
So if I understood you correctly, property damage maybe went down a little bit because of the reclassification of marine, but it's certainly the trend is not for property damage to go down.
No.
So I just want to highlight that point. And also, I know there are a number of things we try to do proactively. For instance, the Board of Ed has had some serious concerns with flooding and burst pipes at the Havermeyer building. So we tried to implement the water sensor program so that at least we wouldn't, things happen, but at least if it happened over a weekend, we'd be able to get there quickly and figure it out. Are we doing those types of things throughout town and the Board of Ed to proactively address situations that we can potentially foresee?
So we continue to have mitigation measures in place for different areas. And I don't know how much you've heard about the enterprise risk management program that I'm trying to get implemented in the town and meeting with all departments. That's other ways for me to find out what exactly they're doing to mitigate, because there may be some things being done that I'm not aware of. They just haven't let me know. Or things that they should be doing that we'll try and implement. So I think that is going to help in getting a bigger picture with all the departments as well. But yes, we are taking mitigation measures, and we will be doing building inspections as well going forward. So we're going to have a more consistent program for that.
Matt? So the audit committee is in charge of insurance renewals. Go ahead.
No, just to that point, so this has been on our agenda, and we got an excellent presentation from Megan on these points. There's a proposed building inspection agenda here, a plan, I should say, that we're addressing, and then the enterprise risk management. This will all be part of ongoing work in the audit committee, and we'll report out to the full BET as appropriate.
Yeah, and Megan attends all those meetings. Doug, do you have a question? I'm sorry.
Yeah, so I want to follow up on the property damage. Is that a reallocation, just like putting aside the year to year, but just looking back to the actual to now, that's 4%, so 2% CAGR. The year before actual was slightly below that. So is that reallocation, or is our core projection of our underlying policy about a 2% increase over a couple of years?
Are you looking at the marine?
No, 56010.
Oh, the property one?
I think it's 2.5 to 2.6, basically. Yeah, so that's your increase. That's 25. That's 26, that's 27.
So right now, that's just the increase is just based on the total insured value of all of the properties throughout town, including Board of Ed properties as well. So that's how we come up with that, right, with that number.
So does the estimate include the new Central Middle School?
Where we are in the process now, yes. So it has to be, it gets updated as the project progresses. So I get updates from the building committees to update information as the insured value goes up, or right now it would be under the builder's risk
insurance,
policy.
right, but it's
So it doesn't
expected-
really impact the property until we get the CO and it's just turned over to the town. And at that time, it would add to the property program. So it's carried under builder's risk for now.
Right, but assuming there's a delta between insuring the old school and the new school based on value, is this estimate or this projection, is that take into account the new school opening, hopefully at the end of August?
Yes, they have all, yep. I share all of the project information, as much information as given to me, and I do actually look at the capital project book now to make sure that I'm getting all the information. And that is shared with Gallagher when they go and they help to form the budget. So all of that is taken into account. Some of those are a little more difficult because you're like you said, you're mid-project, and there might be, you don't want to have any gaps in there. I know that we're looking very closely at a builder's risk for one of the projects now, and we have Gallagher very heavily involved to make sure that that program has exactly what we need in it, and that it's the best price for that project.
Harry?
Yeah, is it fair to assume that this all includes, other funds, like the sewer buildings are all in the town policies, and we don't charge back to the sewer fund for insurance on its buildings?
We don't charge back for that, right?
No.
It is covered. It is
So,
covered under property, the
just
pumps
for
and all of
public
that.
perspective,
Right.
things that are in other funds, like even the golf course, does it pay for its own insurance?
So it's covered under the town's property insurance for the actual property,
Right.
but they have other insurances in place for other aspects there.
Oh, they do?
Yeah.
So they do bear some?
They have to cover they have
Right.
to have casualty in that.
Yeah,
in
but the
those
town
types, right.
covers it for all buildings, including the sewer department.
Right, correct.
Okay, thank you.
Nathaniel Witherell does get a charge. We do charge them.
Oh, yes, good point, thank you.
And I just want to point out, we do have a separate cybersecurity policy, and I think we've done well there, right?
Yes.
Because why don't you talk a little bit about the work we've done there and how we've managed that risk?
Sure. So the cyber policy renews, and I probably should have gone into this a little bit for those newer, but we renew most of the program on 7/1. So it expires 6/30, we renew 7/1, and that's 3/4 of the policies we do. There are some that are off of that schedule. It's just kind of when we picked up on getting those policies. The cyber one's a little bit of a newer one. We've had it since I've been here, for at least 8 years. But we have a cybersecurity task force in place that I'm on, that Joan also attends the meetings. We meet once a month, and there's a representative from all the different IT entities around town. So there's town hall, there's sewer, we're getting the fire department is going to get involved. We have police, we have Board of Ed, and Nathaniel Witherell. So there's representatives from all of those entities, as well as someone from the legal department. We have a paralegal attend the meetings as well. And we all discuss trying to kind of get on the same page, anything that's going on, anything anyone needs to know about, patches, things that need to be done to kind of stay on top of things in terms of cybersecurity. Also, the Chief Information Security Officer, the CISO, from Apollo also attends those. And then there's also one for the Board of Ed. His name is Eugene Korsak, and he handles their CISO work. So everyone, before it was sort of siloed, and everyone kind of did their own thing, and now we're more of a we're more of a united front, I would say. And so we pass all of this information along to the cyber carriers to keep the premiums as low as we possibly can. They did increase, they dropped capacity, dropped limits, and did increase premiums a few years ago. And the story was that they were catching up with the industry. They had undercharged, in their opinion, for years, and so they were trying to catch up with that. So we did get hit with some increases several years ago, but it's been more flat recently, which has been great. It's IT, the different IT entities have done a tremendous job in staying on top of cybersecurity. They review all cloud apps that come in, or cloud, or softwares, things that come in. I know there was a discussion earlier about how we make sure that the information is secure with any software we're using for financial purposes, and IT is very heavy into that, having Apollo look through it. They ask for the SOC reports, they ask for all of their security-related information, so that we can make sure that the information that we're storing in a third party, that's a third party has access to or is storing for us, is secure, or as secure as possible. So.
Thank you, Megan. Any further
you.
questions? All right, Joan, are you through, or are we going? We have a couple more pages here.
Just a couple more pages. Thank you, Megan. If we just go to Department 950 debt, that's a principal and interest with the premium. Those will also be adjusted to actual, just to, we know that, we know the actual real numbers now, so. The last page, transfers from and to other funds. I think we've touched on all of these elsewhere, so I think that wraps it up. So 7 minutes early.
Well done. Any further questions? All right, why don't we take a 7-minute recess? And we will reconvene at 11 with Lauren Elliott, our assessor.